Hello, I'm thrilled to welcome you to today's webinar, How Financial Services Firms Meet Demand with Digital Acceleration, brought to you on CFO.com by Industry Dive with support from the sponsor of today's webinar, Workday, and its partner, KPMG. My name is Megan Billingsley, and I'll be your moderator for today. Before we dive in, I have a few housekeeping items to share with you. At the bottom of your screen are multiple application widgets you can use. All the widgets are resizable and movable, so feel free to move them around to get the most out of your desktop space. The slides are available as a PDF under the Related Content widget. Please note the slides will advance automatically throughout the webinar. To enlarge the slides, click the Enlarge Slides button located in the top right-hand corner of your presentation window. For those attendees seeking CPE credit today, you must answer all 3 polling questions and remain on the line for the duration of the webinar. Credits are awarded within 24 hours. Afterwards, if you are eligible to receive credit, you will be able to click on an icon to download the certificate located in the certification section. If you have any questions on credits, please email webcast_feedback@cfo.com. We encourage you to submit questions at any time throughout the webinar using the Q&A widget. We'll try to answer these during the webinar, but if a fuller answer is needed or we run out of time, it will be answered later via email. Please know we do capture all questions. Finally, following the webinar, you will be able to access the on-demand recording of the webinar using the same link from today's live event. Now I'd like to introduce you to today's featured speakers. Today you'll hear from Alan Narkowitz, Partner, National Financial Services Lead, Finance Transformation, KPMG, and Jim Gahagan, Principal Solutions Marketing Manager, Financial Services, Workday. Alan has spent his career enhancing the CFO's organization through people, processes, and technology improvements. For more than 20 years, he has combined his analytical knowledge with his detailed systems experience to design, lead, and execute global finance solutions for his clients, focusing on the financial services industry. Jim serves as Principal Solutions Marketing Manager for Financial Services at Workday, where he has global responsibility for the company's financial services marketing strategy. With more than 30 years of managerial and consulting experience in financial and information systems management, Jim is skilled in the effective use of information technology to solve complex business problems, particularly within large financial services organizations. During today's webinar, Alan will present a few slides to tee up today's topic. I'll then be posing a number of questions to both Alan and Jim that build off of Alan's slides. We'll leave time for audience Q&A, so please remember to submit your questions for today's speakers. Before I turn things over to Alan to get started, we'll launch our first polling question of the day. The question is, on behalf of my company, my finance team is accounting for changes that traditional business models can no longer address. The answer options are strongly agree, disagree, strongly disagree, or I don't know. Please take a few moments to select your answer, and for those attendees seeking credit for today's webinar, you will need to answer 3 polling questions. This is our first question. I will leave this question up for a few more seconds to allow the remainder of the attendees to answer. Once I shut this question down, we will share the results. All right, as we can see here, the most popular answer is agree. Thank you for participating in our first polling question. It's now my pleasure to turn things over to Alan for his presentation.
All right, great. Thanks, Megan. Hi, everyone. This is Alan Narkowitz from KPMG. And so as we go to our first slide, just to tee this up, I love to talk about everyone's favorite topic, COVID-19. It's just as we talk about digital acceleration, I like to think back to where we were a year and a half ago. So KPMG had put out a survey. We got about 200 companies that responded. And so the first thing that we found, now this was about a year and a half ago, just to compare, is that 96% of financial services companies virtually closed their books essentially in the same amount of time as before COVID hit. Now, remember back then, everyone with zero notice basically went off-site, remote, may or may not have even had a laptop. So this is incredible. This goes to show exactly who we all probably knew we were in finance and accounting, which is this stoic group of workers that no matter what happens, they get the job done, deliver, and will roll the sleeves up, and just that's who finance and accounting has always been. Now, as you go down to the bottom left, you can see there were issues, though, of course. You know, a big issue, especially with a lot of banks, where they had moved a bunch of folks offshore. You talk about people in India that were in these clean rooms or white rooms, and all of a sudden they can't go to work either. And they didn't have laptops. So suddenly you had potentially hundreds of people processing things, can't go to work anymore, and was just a huge challenge to overcome. You go to the top right, and the companies unanimously seem to agree they have to get more automation. I think this is highlighting some of the dependencies on people to push things through. As you go to the bottom right, one of my insurance clients who was going through IFRS 17 just before COVID hit, they had been working on some offshoring and other operating model changes. For them, they had luckily already upgraded some of their tools and communications, which was just fortuitous given that all of a sudden everyone was off site. But you can see a bunch of the respondents, they knew immediately they had to focus on these collaboration tools. But then right after that, they go automation. We know automation is circling. And so you take that, and if we flip to the next slide, you say all of that is old news, though. And so what really is happening now? And I can tell you that as we talk about who finance is going to be, and back then this was who are they going to be in 10 years, but now the question is who is finance going to be today? And this is really getting to digital acceleration. Automation, this increased support of innovation, is the very first line item. I think about the conversations that I've had. I'm kicking off a project right now with one of the larger banks in the US, and they are absolutely going, forget all that, how do we get better collaboration? It's actually how do we go and achieve the future? And getting into a mindset change of innovation, thinking about allocation, utilizing capital in a different way, going down, knowing that finance is the one that has the trust in the numbers. So proactively leading the enterprise, doing that as the cornerstone across the strategy, your finance, your analytics. When it comes to data, we have seen other large financial services institutions spend literally hundreds of millions of dollars on enterprise data warehouses outside the finance function with limited success at times, potentially hiring hundreds of data scientists and not having the results they were hoping for. Well, the difference is when someone was bringing analytics to you and you say, well, what does this tie to? It wouldn't tie to anything. In the future world, and knowing who finance being at the cornerstone, when finance presents numbers, we know exactly where it ties. We know it ties to your financial statements. It can should tie to your regulatory or statutory filings. And so finance being that cornerstone with the data. You know, the next one is always a hot topic, and it employs 70% less labor. You see the manual work everywhere. And at first you go, oh my gosh, this sounds like complete chaos in my organization. And I'm not saying you're going to get to 70% labor across everything today, but the automation does help you reduce how much manual work is there. And this is that digital acceleration. Think about all the offshore teams that many of the financial services companies have, and you might not need those offshore teams anymore. If you have true from your transactional systems through a finance hub, accounting center, into your GL, Workday financials, into your EPM tools adapted, then all of a sudden, if you have the linkage that's tied to your statutory reporting, your regulatory reporting, depending on what type of company you are, all of a sudden the automated work, the manual intervention between those layers disappears. As you continue going down, enabling the business agility. As your companies are looking to grow, you have these expanded volumes of data. Maybe you're going to acquire, go through an acquisition, you have new segments. The concept of the cloud is that you can scale up with ease at any point in time. And not only that, there's this old concept from the auto manufacturers, the Japanese auto manufacturers back in the 80s called Kaizen, which is this continuous improvement. And so with the cloud and the ability that we know that the processes that we can put in today that are automated and get us to a lot of these benefits that digital acceleration can get us to, they're not done. It will continue to evolve. And this whole concept that we can push updates to your platforms, and all you have to do is essentially get the user manual and say, well, what has changed for me? Because the technology advancements continue to evolve, continue to be provided to you, which will continue to get you even more automation over time. That's the concept of this agility. The speed of insights, we talk about how we can get real-time insights. And with this, we get to the concept of Alexa. Hey, Alexa, tell me where I was off on my forecast today or this month. And that the device can read it back to you. And part tied to this is the concept of intelligent forecasting, where the computer can start making picks better than the people can make the picks. And so instead of your team spending time in FP&A with their EPM tools, trying to figure out what the future will be and what the forecast will be, instead the computer is telling you that answer. And as the computer is telling you that answer, you don't get rid of those team members. Those team members are now focused on what can change. What are the levers I can change? If it's forecasting, I'm going to have a dip in policy sold for an insurance company. Does that mean now you're focused on levers? Should I be trying to reduce expenses somewhere because there's an economic downturn coming? Should I be trying to increase my marketing spend so I don't have that dip? And so you're not as focused on predicting the future. You're now focused on making changes to the levers so you can change the future. As we continue down the role model of collaboration, you think about an insurance company, and you have your accountants, you have your actuaries, you have your FP&A team in finance, you have your claims, you have underwriting. Finance is the glue of where all of that comes together. And bringing that together in one spot to make decisions makings, if you have a single source of truth, that is digital acceleration, where everyone can trust and see what's in front of them with the collaborator in the middle of it. And so, and it's beyond just the technology and the data. It's the entire operating model and all the components of that operating model and the integration with the rest of the organization. And that's how you get to the point that everyone is working together and getting you to the better, more efficient operations. You also can get to the improving the forecasting accuracy. We did talk about that a bit. And the artificial intelligence processing big data. You hear the term cognitive and cognitive computing. I will tell you, we are at the beginning of that. And there's only going to be more and more artificial intelligence cognitive employed in finance and the rest of the organization. So the key is to build the foundation with the data, utilizing tools such as Prism in conjunction with Accounting Center, to Workday Financials, so that you have the data organized in a place that you can then employ cognitive over time versus trying to solve it all at once. But this is that whole digital acceleration, is how do you get the right foundation built today that is going to help you in the future. And then finally, with all of this, there will be new skills and new talent. The finance professional is the strategist. Now, I often talk about, to me, it's this funny theme that I like to talk about, which is going back to college. The things we learned in college, the skills we learned about being an accountant, being in finance, those skills oftentimes we end up never using again in our jobs. You get to a job, you learn that I'm going to process this, I need to get this data into this spreadsheet and change it using pivot tables, and then I provide this report and I do these reconciliations. It has nothing to do with what you actually learn about accounting and analyzing your numbers and trying to make decisions about where you're headed with finance and making capital decisions. And so what we learn in college, I actually believe, is going to be in the future the skills that we need to use and we will want to use, and which, by the way, it's what we all get more job satisfaction from. When we go out and we do programs and we ask people, what are the things you want to stop doing? They tell us all of the things that are these manual intervention activities that everyone finds boring and non-value add. And so our teams don't want to be doing that work anyway. So in a nutshell, this is when people ask me, what is digital acceleration? And it encompasses all of the things that I just talked about on this slide. And now, why do we do it? If you will hit the next slide, as you can see, we have a couple different models focused on, the historic trend of where you are versus the digitized finance of the future. And on the left, with this historic trend, and it's not that the numbers are perfect, it's more the concept here. As you grow and your revenue goes up, what has happened historically is that your expense load has been going up essentially on the same trajectory. And what we are trying to change for those companies that invest in the digital acceleration, as you can see on the right model, as you grow, as you expand your company, you increase the revenue side of your income statement. The expense side should be leveling out, because essentially what you've done is that you're using the digital aspect versus the manual aspect to go keep up with the revenue side. And so this is where we're trying to head. And if you think about banks and where banks have been, the outside world of the competition, so many banks have had this antiquated software and technology platforms across the bank, especially in finance, where there has been a lack of advancement for 10, 15, 20 years. One of my clients actually has a general ledger that's almost 50 years old before embarking on their digital program. And so if it's at a point that essentially, I would say 80+% of the banks that I've talked to are all going through some kind of finance digital transformation right now, or are planning on it. And so if you're not on that board, then you're going to fall behind and you're going to struggle to keep up, as in the future, they can have that growth without that expense load, whereas your bank can't. Now, insurance is in a little bit different spot. You think about insurance has been driven so much by accounting change. The largest accounting change that has happened in 100 years for insurance, really the largest accounting change that's happened ever for insurance, between LDTI in the US with US GAAP and IFRS 17 internationally. There are just drastic changes that have been happening. Those companies that have taken that mandatory change that they've had to do and utilized by adding not that much more budget, but some slightly more budget to really take advantage of having to change, to embrace the new architectures and the new technology and finance with new operating models, are those that are winning and going to be winning, especially in the next 5+ years after this is all said and done with this accounting change. Capital markets, asset management, there's less outside pressures at right now. We know some of that is happening, but make no doubt about it. That is coming. All of this is coming for all of us, whether we like it or not. Those that aren't embracing these changes, aren't heading towards that digital acceleration, are going to be left behind. As we move on to the next slide, remember though, we just talked about expenses. It's not all about expenses, just bringing you back. If you get that data foundation, you have that lineage from transactional into a Prism accounting center, into your general ledger, flowing in your EPM tools, into your adaptive, then all of a sudden you get the better analytics. You have the data flexibility. You can get to dashboarding. You can get to ad hoc reporting and self-service that wasn't there before. You don't have to wait for IT tickets that you have to wait 3 months to go get a report that you didn't have before. Your regulatory questions that you get from your regulators that are fire drills that used to take you, an hour to 2 weeks to go solve and to do all these reconciliations, that can disappear. Statutory reporting with the multi-ledgers and having automated feeds that are hitting both your ledgers at one time for your stat reporting, your US GAAP reporting, your IFRS reporting. These are all there now. This is the foundation for the cognitive computing for the future. And most of all, this is about decision making. I get asked constantly to help our clients with developing their finance business cases. How do we go justify these programs? It is very easy from that other slide to try and come up with the hard benefits, meaning the expense savings that you can do. And it's difficult sometimes to get this positive ROI that companies want when it comes to finance programs. And it can be done, but it takes some hard decision making around resources if you really want to go that direction. But the soft benefits, what you can do, just imagine if you did better decision making and went into focus on one marketing campaign, one service line you weren't going to focus on, and produced 1% of revenue can pay for the entire program. And so those are the soft benefits because it's hard to justify that. But if you get to that better decision making at the bottom of this page, it might be the most important aspect of all of this for the future. And finance is now at the cornerstone. We see in our CEO surveys we do every year, the CEO's expectation of the CFOs is just higher than it's ever been of them being the trusted provider for the organization of the data and analytics. And then as we get to our last slide, which I will just cover pretty quickly, it can't just be done with technology. As you see on the left, we always get asked about organizational models. We call it the service delivery model, like what should I do with centers of excellence or offshore, finance versus IT, who should do what. All of this can't happen without that middle box, the target operating models, which is you have to consider your data, your insights, your reporting, your people, and where do your people align. Governance and controls, you can't forget. How are you going to change your processes and standardize them across the organization with the technology component that will continue to evolve? So all of this comes together. And this isn't just one person in the organization. On the top right, we know it's the CFO, the controller, the head of FP&A. I mean, I've had conversations with multiple of those people in those roles at banks, at insurance companies, at capital markets, asset managers in July, in the last 20 days. Bottom left, when you go to do these, do not forget the business has to be more involved than ever. You have to be thinking about the reporting up front when you're touching all your data. And on the bottom right, the CIO and the CFO, both are extremely important. We are not needing IT to be as heavily involved in the future as they have been in the past, but they still are critically important. Think about all the integrations that have to be done. Think about the overall landscape. Think about change control that IT knows so well. But the CFO now, more on having data stewards in the finance accounting organization, more on owning the reporting, owning their processes and the configuration as the updates come out. And so all of this together brings us to digital acceleration, which is why we're here today. Thank you, everyone, for listening to me kick us all off on this topic. And so I believe, Megan, I'll turn that back over to you as we can get into some of the panel discussion.
Great. Thank you, Alan, for an excellent presentation. We will now pause briefly to launch our second polling question of the day, and that is, digital acceleration is among my company's top priorities. Your answer options are strongly agree, disagree, strongly disagree, or I don't know. Please take a few moments to select your answer. For those attendees seeking credit for today's webinar, you will need to answer 3 polling questions, and this is our second question. I'll leave this up for a few more seconds to allow the remainder of our attendees to answer. And once I shut this question down, we will share the results and begin today's discussion. All right, as we can see here, the most popular answer is agree. So thank you for participating in our second polling question. We'll now begin today's discussion. Our first question, Alan, what new risks are financial services firms encountering amid rising consumer and corporate demand?
Thanks, Megan. We probably have talked a little bit about some of this. The biggest thing is probably efficient operations are just demanded by all, especially as you think about what the customers are demanding of the companies. They want the fees to be lower. They want, the highest rates of return. They want lower premiums. And so having efficient back office operations, it just gets pushed down, that we must have efficient operations. One of the things we have to do to get there, you have to have seamless data with more data. We have the regulatory risks with the regulatory data and what's just demanded by the regulators. And then maybe the final one I'll just throw on top of this is the customer's end user experience is just demanded to be more simple and easier than ever to interact with a company. But it's not just them, it's actually your employees also. I think many of us are going through challenges now with hiring, retention, those types of things, and it's our employees are demanding that their jobs have good access to tools and interactions with the company's tools. And so I'll just pause there. A lot of these are these changes that I think we're all having to face.
Great, thank you. And Jim, anything to add?
Yeah, I think, Megan, what I would add there, and Alan, I think is spot on in the whole area of operational efficiencies. But the harsh reality is when you look at where banks are right now, they're not there yet. And I think Alan has pointed that out. And I give you a real live example. I don't know if anybody's been following like the earnings releases over the last few weeks for the top 5 major banks. And Financial Times actually did an article yesterday. The jump in operating expenses at JP Morgan, Goldman, Morgan Stanley, Bank of America, the top 5, is significant. I mean, their operating expenses have jumped over 10% in the most recent quarter as compared to last year when we were just at the start of the pandemic. But it's really interesting to look at where that, it scares you that it's up 10%. But if you go back to what Alan was speaking about, the areas where they've increased expense, okay, are compensation to retain staff because of the drain that's there right now. Second, big increases in technology spend, which is going to help accelerate this move in the digital acceleration that we're talking about. And lastly, which is interesting, is they all have a significant uptick in marketing expense because they really need to increase that to fend off the competition. The market is still incredibly competitive right now. If you think about it, the loan businesses have dried up. I mean, interest rates are way down. So profitability for banks in the lending space. So I think, more and more it's going to turn back to this idea of operational efficiency, having an efficient back office, having my finance functions, my HCM functions, be as automated and as hands-off as possible.
Perfect. Thank you both. Our next question is, what technological developments are making it possible for financial services firms to introduce operating models to respond to these risks now? Jim, let's start with you on this question.
Yeah, I think that first and foremost, and probably the most important, is the willingness of the financial services organizations to adopt cloud technology for their finance processes. And I'm sure Alan's had these experiences. If you go back a couple of years and you sat with a CFO or a controller and said, hey, I'm here and I want to move all your accounting processes up into the cloud. They just would have probably laughed you out the door. But that has dramatically changed in the last couple of years. The people are seeing the benefit associated with moving these processes to the cloud. I also think it's a way, by moving your core financials to the cloud, it's also a way of having a better approach to how do I deal with all the data, operational data that's in my legacy system, whether it be a loan system, a policy system, and being able to get rid of many of those hard-coded integrations that were done by the IT organization, and being able to, in a much more intelligent way, turn those business transactions into accounting events. So I think that, more and more banks are starting that migration to adopt cloud. They all jumped on board to do HCM, but now we're seeing more and more that the larger banks are in active sales cycles right now in terms of looking at moving core financial processing and analytics to a cloud-based environment.
Great, thank you. And Alan, what would you say?
Yeah, Jim, I love your response. Maybe the biggest thing for me, which is adding a bit to what you had said, is on the data side, which, these these finance hubs, the Prism Accounting Center combination, and the ability to get your transactional level data into a single place for multi-purpose, where you can do regulatory reporting, you can do stat reporting, you can do disclosures, and it all has lineage to your financial statements through Workday Financials. That to me is a giant change. And it's not only a giant change for today, this truly leads to the foundation for the future. I mean, we don't know what artificial intelligence and cognitive is ahead, and I know I talked about it before, but having the data organized and trusted and basically certified is the foundation for allowing you to do all of that other analytics, cognitive down the road. So you not only get the benefits today that help you get to those operational efficiencies. I mean, when its compensation is the number one factor of being up 10% quarter over quarter on expenses, then we love people. I love my teams, but having people doing the value add work is what we want. And having the computer do the non-value add work is where we want to head. And that's the biggest technological development, I think, that we've had is really on that data accounting hub, accounting center, Prism, recently, in conjunction with probably also what Jim said, the cloud-based releases every 6 months so that you just get the updates ongoing versus waiting 20 years for your big finance transformation program.
Great, thank you. Our next point of discussion, how would you advise that finance leaders collaborate with other areas of their companies on planning for digital acceleration? Alan, let's start with you here.
Oh yeah, this is a great one. This is a topic at every one of my clients. I mean, one of the banks is, they're saying, hey, we want to look at really digitizing the entire bank. So, loans, deposits, wealth management, and finance. And where do you start? And so you have to be collaborating across the organization. I mean, when it comes to finance, every one of the other aspects of your business flow into finance. So you have to have finance up front with one of the other areas. And you have to be collaborating. Trying to tackle everything in your organization at one time, that's never a good thing either. You do need focus. You absolutely must have good collaboration between IT and finance. Just as I pointed out earlier, you have to have IT involved in these programs, but finance needs to be the one owning them. And I know I gave the example with banking. I mean, the same goes with the other insurance, other aspects in financial services, insurance, capital markets, asset management. And so all of them must be collaborating across. I do see that these are all big money spends. So you do have to have your budget and it approved for your aspect of the organization. In order to do that in conjunction with another one, is to me, that's bonus, and that's good if you can do that. But unfortunately, it's just the reality of the world. The way budgets lay out is you usually do have to have yours somewhat segmented off, but still collaborating with everyone because they will all tie in at some point in time. Jim, I don't know if you have different thoughts.
No, I think my thoughts are pretty consistent with that, Alan. I think the one thing I might add in there is that when you look at the banks and the insurance companies, another significant player in this whole equation is really the head of operations and the people who are responsible for the day-to-day processing of the front end systems, whether it's a loan system or a clearance and settlement system for a capital markets organization or policy or claim systems, because to achieve this level of digital acceleration, you have to engage them and you have to get them to buy in with the process of how there's a better way of getting that information into the financial systems downstream. And, as many as who worked in the industry, operations side is people have been pretty set in their ways. I mean, they've been using these systems for an extended period of time. They're comfortable with how they work and how they close the business, but, for their particular part of the business. But I think you have to look at it in a much bigger total picture of what it really means downstream when you get to finance and all the financial systems. So I think partnering, in addition to CIO organization, partnering with those operational leaders across all the business units becomes critical, I think, to your success.
Hey, Jim, I'm just going to add one more just because I feel like I'd be remiss if I didn't add, which is if you're going to do some sort of finance digital acceleration program these days and you're an insurance company and you don't take the opportunity to link your actuaries with your accounting finance organization, it would be a huge miss. And so that is just a critical collaboration point. I mean, historically, the two have operated in silos. Some insurance companies have gotten better than others in the last 10 years, but this is really the chance to truly integrate, get single source of truth, and then get the integration between the actuarial models and accounting and into FP&A that you just didn't have before.
Perfect. Thank you both. So I'll now pose our final question to the panelists. After that, we'll launch our third and final polling question. And finally, we'll transition to audience Q&A. So please continue to submit your questions for Alan and Jim, and we'll get to those in a few moments, time allowing. So we'll start this one off with Jim. How can finance executives apply their understanding of digital acceleration to determine how best to deploy technology to manage risks for the long term?
Yeah, I would say, Megan, I think one of the key things that the CFO and the lead finance executives, they really have to be that internal champion. They have to be the evangelist across the rest of the education. And it starts with, in a lot of ways, educating the rest of the organization in terms of what digital acceleration means in terms of finance and how do we get to that, nirvana level that we aspire to as a company. So I think that a big part of it is being that evangelist, being that thought leader, and being very engaging. I think that, to put a comprehensive program together for digital transformation in finance, you need the buy-in across the organization. We have a very large bank in the Midwest, who just went live about a month or so ago, and their chief accounting officer, and one of the things that he said was this would not have been possible if it wasn't for the collaboration across the entire organization. And they made that their top priority in terms of engaging and educating everyone on the entire program. And they still have a ways to go in their program. They have a lot more things that they want to do. But again, I think the CFO really needs to be the internal champion within the organization. And
Jim,
thank you. And
just
Alan?
added. Oh yeah, thanks, Megan. Just to add to that, I completely agree. It probably goes beyond the CFO in finance because, we talk about lessons learned from ERP implementations from 20 years ago, or even more recent, and it's hire some consultants, they come in, they work with IT, they take your old ERP, put in a new one with IT. And the business is surprised, finance and accounting are surprised at the end of the day that not much changed. And it's because it was an IT project. And that doesn't work anymore. And it's not the model and it's not what we want. And so it's not just the CFO setting the tone with the organization, it's the CFO setting the tone within finance that they need to be the owners. And they need to take ownership of what they're going to get into in the future. And that they should use standardized processes and leading practices and change their operating model. And that finance can and should be the owner of how that's going to change, because once it's live, they actually have more control than they've ever had of the system with the new technology. And with the cloud-based technology, the way the updates come out, it does take less of IT than it's ever needed in the past to run these systems. And so having a mindset change for the roles within finance is critical in these programs, of not just allowing IT to go and do this for you. And the truth is IT doesn't want to do it for finance. They want finance to be the owners of this, and they want to support it. It makes their jobs more valuable as well when it can help change the organization for the better.
Perfect. Thank you, Alan and Jim, for an excellent discussion today. So we will now launch our third and final polling question. And it says, within what time frame, if any, will your finance team take an active and substantive role in your company's digital acceleration plans? The answer options are, my finance team is already doing so, within fewer than 6 months, within at least 6 and fewer than 9 months, within at least 9 months from now, my finance team will not have an active role in my company's digital acceleration plans, my company is not pursuing digital acceleration, or I don't know. Please take a few moments to select your answer. For those attendees seeking credit for today's webinar, you will need to answer 3 polling questions, and this is our third and final polling question. I will leave this question up for a few more seconds to allow the remainder of the attendees to answer, and once I shut this question down, we'll share the results and address questions from our attendees. All right, as we can see here, the most popular answer is, I don't know. All right, thank you for participating in our polling questions today. So we're now going to review some of the questions that were submitted by the audience during the session. As a reminder, you can still submit your questions via the Q&A section of the interface. Our first one is, what are the most prevalent obstacles that prevent financial services firms from pursuing digital acceleration?
Megan, do you want me to jump in on that?
Yes, you're welcome to take it.
Okay. All right. I'll jump in on that, and then, Jim, you're welcome to add. I would say that the biggest obstacle is cost. When, doing digital acceleration does take investment dollars, and there is this desire for these business cases to have this positive ROI, which can be difficult to achieve when you're looking at hard benefits, unless you're going to try and do some massive riff of some sort, which most companies aren't looking to do that. And you still can achieve those with having a reduced workforce, but it doesn't need to be a riff. It can be, natural retention and not filling positions over time. But I think you tend to need more strategic thinking executives that are realizing the true benefits of digital acceleration across the board. And so having that, knowing that it does take some investment and it usually takes some time to get that planned out, it often takes an outside accelerator of some sort, like your competition all doing it, or your ledger going out of service, your historical ledger going out of service, or accounting change, or regulatory challenges. So usually there's a burning platform that helps to get that started, and then that drives and the ability to get all these benefits and trying to take advantage when that door or that window is open. Jim, anything to add or thoughts? Different thoughts?
Yeah, I think the one thing, and I agree totally with what you said. I think I would add into the discussion really is around it's the trade-off. If you look at, I've seen many business cases where people look at what's the cost today of maintaining my current financial systems environment. I have all these legacy interfaces that I'm maintaining. I have a large programming staff in the IT organization. So I've seen people, partial justification is, I'm not going to be spending and investing as heavily in those maintenance dollars on an ongoing basis the way I am today, because now I'm moving to a cloud environment where the vendor is providing the code. And I know Alan and others that we work with, including our own professional services, we encourage, I should say, discourage people from doing heavy customizations. We view it more as configuration in order to be able to, suit your business transaction, suit your business problem. But again, I think, it's not cheap. We all know that. But I think that you can, over time, really justify it because you're really eliminating a lot of costs that you're incurring today.
Yeah. And likely over time, you can't afford not to do it, is sometimes what it comes down to as well when those around you do it.
Excellent points. Thank you so much. Our next question is, how can finance leaders enable their companies to identify and overcome obstacles to digital acceleration? Of course, you both are welcome to answer, but would one of you like to kick us off?
Sure, I'm happy to. I think we talked a little bit about this with maybe one of the questions before, but I mean, just adding to it, you know, that this mind shift, and oftentimes what happens when we go to do one of these programs, a big obstacle to digital acceleration is people say, this is the way I've done it before, I can't change. And so there's an organizational change element of what the people who know so much about your company and the way that finance and accounting and processing has worked in the past have to be almost educated on how the world of the future could work and what is leading practice versus what they've been doing for 20 years. And so there's a whole ability of education and organizational change that surrounds these programs also that helps your team to see the art of the possible. And you'll have some people that are gung-ho that want to just go and go after the innovation. You'll have other people that will take a stance that you just can't do it any differently. And you have to help coach those people into being on board and to accept this change. And of course, that's a little bit different company to company and culture to culture. But it is important for the tone that Jim had talked about, your CFO setting the tone for the organization, and then that filtering appropriately.
I think you said it well, Alan.
Perfect. Thank you for that. Our next question is, within financial services firms, how does digital acceleration change the priorities finance executives establish and the types of skills they seek with regard to the teams they lead?
I'll start that one off, Megan. I think one of the key things is that you know, the role of people within finance and accounting is shifting. I think that you're seeing much more of an emphasis on people with very good analytic skills, a lot more business analysts, especially as you look to technologies that put more and more of the power in the hands of the users that don't require someone to code something to make a change. So I think that you're seeing an expansion in the finance functions of people with a lot more analytical skills, more business analyst types, and that complements the traditional, you know, CPA, controller type functions. But I think you're seeing that melding between the IT. Some of the IT functions are starting to meld into the overall finance function when it comes to deploying these type of programs.
And Jim, I hope this isn't controversial. Maybe it is a little bit, and I think it's additive, but maybe a little bit on the cuff here. But you know, a couple of years ago, I feel like everyone was on this binge of we have to hire a bunch of data scientists. And I'm not so sure it's data scientists just yet. You know, I agree, analytical skills. But I do think if you think about the analytical skills you need, an accountant that can look and see the debits and credits and go, oh, I understand why we had those. And that means that I can see an indicator of what's happening with our business. It's just a very different role and a different analytical skill than in the past someone going, I have to figure out what debits and credits to make. And if the system is going to automate the debits and credits now, and you don't have to worry about that part, and instead you're analyzing why did this happen? And I understand accounting enough to understand why it happened, and I understand how that ties to our business enough. That to me is a big change. And so focusing on the accounting, the finance skills in conjunction with your business and truly understanding your business is just so much different than how do I make the right debits and credits. And so I think that somewhat goes in conjunction with what you said about the analytical skills. It's just I think those companies that went out and hired a ton of data scientists, it might have been a bit too early. And it might be that over time, maintaining these cognitive models that come out might be where it shifts to in the future. But I think we still have a little ways to go on that. And so it's more about getting the foundation right so you can get to there.
Yeah, I would agree with you, Alan, on that. I think that, when you look at traditionally where in the past couple of years, where have the data scientists been most successful? And it's a lot more skewed towards the front office in terms of, algorithmic trading, the quantitative analysis in those front office trading, particularly in capital markets and the front office trading applications. But I think you're right. It's really the person in finance just needs to have a very, very strong understanding of the business. And I think that's probably the biggest change that you're seeing happening, is that the people in the finance organization truly understand all the areas of the business and how that all comes together and all ties together.
Yep.
Perfect, thank you. Our next question from the audience is, do you have perspectives on how to align finance to a more dynamic, agile project delivery environment?
Oh, this is a great question. I mean, it's a great question because we get asked this quite a bit, especially with the Workday implementations. And it's interesting. True agile is maybe a longer-term discussion, but I think the aspects that you're probably looking for about more of an iterative build, seeing the results earlier. In the old, when you put in an ERP system years ago, it would be gather requirements, IT would go off and build, you'd get to go live, and then you'd see what they built. Or maybe at user acceptance testing, you saw what they built right before go live. And it was never what anyone expected. Things fell through the cracks. The communication it didn't go right. And so the methodology is now built that you see the system, you see it as you go, you do have iterations built into your plans, and that iterative cycle is, to me, what is the critical part. And that reduces risks. It actually has helped to expedite the timing of doing these programs versus, the 3-year program is not there anymore. These can be done much faster than that. And so to me, that's the critical point. But there is still balance in these conversations. There is often, IT might say, hey, we are a pure agile shop, and that can conflict with some of the methodology and approaches to go do these programs that have one defined go live where you can't have half of an income statement or half of a balance sheet. You have to have the whole thing. So it does take some balance with that question and the answer. Jim, I don't know if you have anything else to add.
No, I think that makes a lot of sense.
All right, perfect. Our next question from the audience is, as we see more and more digital acceleration in the corporate world, do you expect to see more hybrid roles of IT, finance, accounting? And how do you see companies adapting their employees' roles?
Yes, I can start off, Megan. I think Alan and I just touched upon that a little bit, but I think that it goes back to that, knowing the business analyst role combined with stronger analytics capabilities and skills. And I think, we're seeing more and more of that type of person shifting into roles within the overall finance organization.
Yeah, and I think I agree, Jim. The super user concept, finance, accounting had these super user systems in the past, or typically did. I think in some regards, it's still those super user roles. With less, those super user roles are becoming the tie. And that is a bit of a blended skill anyway. Sometimes those super users sat in IT, sometimes they sat in the business, or they maybe transferred from one to the other. And I think that's the role that sits in finance now. And as the systems are configured and you don't need custom code, those are the people that really will understand your system. So I think there is more of a blended role, but I think that they're likely going to be more of a business role than they are going to be an IT role.
Mm-hmm.
Perfect, thank you. That is all the time that we have for today. I'd like to thank Alan and Jim for joining us today and sharing their insights and expertise. We'd also like to thank attendees for joining us today for How Financial Services Firms Meet Demand with Digital Acceleration, brought to you on CFO.com by Industry Drive, with support from the sponsor of today's webinar, Workday, and its partner, KPMG. As a reminder for those seeking credit for today's webinar, if you have any questions on credits, please email webcast_feedback@cfo.com. Today's webinar will be available on demand, and if you want to review any of the content that was discussed today. Finally, we invite you to complete our online feedback survey that will appear in a separate browser window. We appreciate your feedback. Once again, thanks for joining us, and we hope that you enjoy the rest of your day.